In our previous sessions, we've come across different concepts or principles of accounting. If you have missed those, do check them out by clicking on the links given on the screen. In this session, we will talk on 2 more accounting principles. Now, this is the 7th month of operation in my friend Peter's grocery business, October. Well, a few days ago, Peter was asking me some questions related to recording of transactions in accounting books. So today I've got 2 different kinds of sample reports to show. This one is a family doctor's clinic report, and the second one is the footwear store's report. In this first report prepared, we can see there are cash expenses and incomes. It looks like a very simple report. There are no debtors or creditors, and there are no pending expenses or any prepaid expenses recorded. These pending or prepaid expenses are normally seen with words like outstanding or advance, etc. So this means he has recorded only cash transactions, that is when money either comes into the business or when money goes out of the business. So this way of maintaining your records only when cash or money is received or paid is called the cash basis of accounting. Generally, the cash basis of accounting is used by small businesses who have fewer transactions or by professionals whose nature of activities is best suited to cash basis of accounting. Its main advantage is that it is readily understood by people with little or no financial or accounting background. Thus, it is easier and also cost-effective method. But this system has certain drawbacks too. What happens if we place an order for a machinery and this machinery is received, but we are given a credit period of 30 days to pay for it? If we follow the cash system of accounting, since cash is not yet paid, we will not show this machinery as a fixed asset, and we will also not record payment to be made for it in future. So therefore, it gives an incorrect status of assets, and we don't know what is the owed amount. In today's world, majority of business transactions are on non-cash basis. This is a major drawback of keeping records on cash basis. Let me tell you another problem that could arise because of cash basis of accounting. So imagine there are 2 scenes here. Let's say we are talking about an electronic business. So there's a customer who purchases a television set for a specified price by giving a post-dated check, which will clear in about 15 days. And the television set will also be delivered within 15 to 20 days. Now, this was the last piece available for that model of television. The television set is packed and it is kept aside for delivery. So the sale has been made, but according to the cash basis of accounting, the sale will not be recorded as cash or money from the customer has not yet come in. Let's see the next scene. Now, after a few days, there is another customer in this store looking for that same television model. Now, that model has already been sold to the first customer physically, and it is already in the delivery stage. But due to no records kept on paper, it may still be showing as available. And the seller may make a mistake of selling that same product twice if goods sold on credit basis but not yet delivered is not recorded in books of accounts. This means cash basis of accounting is showing a wrong status of the stock available. So to avoid such conflicts and confusion, there is another way of keeping accounting records. Let's now take a look at the second report that we have here. Unlike the first report, in this report we can see there are debtors, there are creditors, and we also see the words like prepaid and outstanding. This means in this report, transactions are recorded even when expenses or purchases are pending to be paid, or incomes or money from sales are yet to be received. So all credit transactions are recorded. These transactions are not recorded when cash is coming in or going out, but they are recorded as and when it occurs. That is, when they arise or accrue. So this concept where we recognize transactions on arising or accruing is called the accrual basis of accounting or the accrual concept. So if my friend Peter purchased goods on credit for $1,000 on 15th October and he has paid for it on 5th November, then according to this accrual concept, when should he record the purchase? Yes, it will be recorded on 15th October, that is, when this purchase was confirmed. The main difference between accrual and cash basis of accounting is the timing of when revenue and expenses are recognized in accounting books. To clarify the difference between the two, let's say Peter sold goods for $2,000 under the cash basis. That amount is not recorded in books until the customer hands over the money or until Peter receives the check. Under the accrual method, the $2,000 is recorded as revenue immediately when the sale is confirmed, even if you receive the money a few days or weeks later. The same thing applies for expenses. If you get an electric bill for $400, under the cash method, the amount is not added to books until you actually pay the bill. However, under the accrual method, the $400 is recorded as an expense in the period the expense relates to or when you utilize its services. So most businesses use this accrual system of accounting to get a true and fair picture of their business. However, some countries have laws which allow to keep their records on cash basis for certain types of businesses, specifically for professionals like CAs, doctors, lawyers who do not deal in buying and selling of goods. Let's do a little exercise. Can you tell me which system of accounting is used in each of these cases? A business sold goods to Roy on 7th December on a credit period. The business recognizes this sale on 7th December itself. A dentist receives fees from patient $100 on giving services. The dentist accounts for his fees only when cash is received. An internet service provider receives advance of $400 this month for services that he will give in the next month. He recognizes the income in the next month when he will provide services for it. Well, that's all for today. Hope this clarifies Peter's doubts and has also helped you to understand this concept. If you found this session useful, do share your comments below. And if you would like more such videos, please like and subscribe. We will see what's new with Peter in our next accounting session. So keep watching, keep learning.